Welcome, everyone. Ready to take a deep dive into something pretty cool?
I'm ready when you are.
Let's jump into the world of Japanese candlestick charting. This is a visual method for understanding how prices move.
And it has been used by traders, oh wow, for centuries.
Our guide for this deep dive is a book called How to Make Money Trading with Candlestick Charts.
And get this, it focuses on the Indian stock market.
Using real examples from the National Stock Exchange.
And the Bombay Stock Exchange.
We're going to break down how these charts actually work, learn what all the different patterns mean.
And we'll even see how they can be used with other indicators.
So, are you ready?
Let's get started.
Let's do it.
Yeah.
This book really emphasizes the psychology behind these charts, like the thinking behind trading. It even claims that, are you ready for this? 85 to 95% of trading is, wait for it, psychological warfare.
Wow, 85 to 95%. That's a pretty bold statement.
Right.
That makes you think.
What do you think about that?
Well, it's fascinating, isn't it? Because candlestick charting isn't just about, analyzing numbers.
Right.
It's about understanding the emotions, those underlying emotions that drive the market.
Like fear and greed.
Exactly, fear and greed.
Classic, right?
Classic.
So those emotions create forces of supply and demand.
Right, which ultimately determine how prices move.
And candlestick patterns can help us figure out, decode those emotional shifts.
And potentially anticipate where the market might be headed next.
So it's almost like we're trying to get inside the minds of other traders.
Exactly. Understand their motivations.
So we can make smarter decisions.
Exactly.
So many people think trading is all about, algorithms and super complicated calculations. But really, it's more about understanding, human behavior.
That's a really good point.
Right.
Yeah.
Now, before we get into all the, specific patterns and stuff, let's take a quick look at, the anatomy of a candlestick.
Okay.
How are these things actually constructed?
Yeah, how do we read them?
So each candlestick represents a specific time frame, like a day.
Okay.
So the body of the candlestick shows us the opening and closing price for that day.
Got it.
So if the closing price is higher than the opening price...
We see a white or green candle indicating a bullish day.
Yeah, like a positive day, right.
Yeah, exactly.
And then if the closing price is lower than the opening price, then we get a black or red candle.
Signifying a bearish day.
Yeah, more of a, a down day.
Yeah, an end of day.
So like a visual snapshot of that trading battle for the day.
That's a great way to put it.
Right. Like, who won, the bulls or the bears?
Exactly.
And then extending above and below the body, we have these shadows.
Sometimes called wicks.
Okay, wicks.
And those show the highest and lowest prices reached during that time frame.
So even if a candle is green, it closed higher.
A long upper shadow might suggest that the bulls tried to push the price higher, but they were met with some resistance.
So there's, more to the story.
Exactly. That's one of the big advantages of candlestick charts. They give us a much richer level of detail compared to just simple line charts.
Yeah, because we can see not just where the price opened and closed,
but also the entire range of price movement throughout that period.
Now, besides these, basic candlesticks, are there other, unique variations that we should know about?
Oh, absolutely.
Tell me.
So you have things like the doji, where the opening and closing prices are pretty much the same, suggesting indecision in the market.
Oh, nobody can make up their mind.
Exactly.
Okay.
And then we have spinning tops, which have these small bodies and long shadows.
Okay.
Indicating that there's a real tug of war going on between the buyers and sellers.
Well, they're duking it out.
Yeah, and no one's able to establish a clear direction.
Wow. So even these, basic building blocks start to reveal some of the inner workings of the market.
Exactly. They give us clues about the psychology of the traders.
Okay, so we've got, the basics down. Now, I'm ready for those one-day reversal signals that you mentioned.
Yes.
The ones that can hint at a potential, shift in the trend.
Right.
Which patterns should we start with?
Let's start with the hammer and the hanging man.
Ooh, dramatic.
Yeah, I know.
I like it.
These classic patterns can signal a potential shift in momentum.
Okay, so those names, they definitely sound pretty dramatic. I imagine they have like a pretty distinct look on the charts, right?
They do. Both of these patterns have a small body and a long lower shadow.
Okay.
And that shadow is going to be at least twice the size of the body.
So that long shadow, that's like the key.
That's the key. It tells the story about what happened with the price that day.
So let's say we're looking at a stock and it's been in a downtrend.
Okay.
How would a hammer pattern form and what would it be telling us?
So a hammer typically forms when the price kind of plunges during the day,
Okay.
but then it rallies back up
Oh.
and closes near its opening price.
So that long lower shadow, that's telling us.
That's showing us that the sellers initially pushed the price down.
Okay.
But then strong buying pressure emerged, pushing it back up.
So it's like a test of that downtrend.
Exactly.
The sellers were like, let's push it lower.
Mm-hmm.
But then the buyers are like, no, not so fast.
Yeah, we're not going to let it go down that easily.
Let's back up.
Precisely.
So that kind of price action could suggest that the selling pressure might be weakening
Right.
and a potential reversal could be on the horizon.
Potentially, yeah.
Now, the hanging man, that's essentially the same candlestick shape,
It is.
but it appears at the top of an uptrend.
Exactly.
So in that case, it would be the buyers who initially tried to push the price higher,
Mm-hmm.
but the sellers came in
Yep,
and pushed it back down.
exactly.
So that long lower shadow is suggesting that although there are still buyers around,
Yeah.
their control might be slipping.
Right, maybe they're losing momentum.
Okay, so both patterns, you get this dramatic price swing within the day.
Mm-hmm.
But the context, whether it's an uptrend or downtrend, that's really crucial to understanding what it means.
You got it.
Gotcha.
But there's one really critical point to remember with all candlestick patterns.
Okay, hit me.
It's all about confirmation.
Oh, so just because we see a hammer or a hanging man doesn't automatically mean a reversal is guaranteed?
No, not at all. We need to see what happens the next day's price action to confirm the signal.
So for a hammer, we'd want to see the price continue to rise.
Yes.
The next day.
The next day, yeah.
While for a hanging man, we'd want to see it decline further.
Exactly. That follow-through is what really gives us confidence that a potential reversal is actually taking hold.
Okay, so patience and discipline are key here.
Absolutely.
We don't want to jump the gun based on just a single candlestick.
No.
Are there other one-day reversal patterns that we should know about?
Yes, there are. There's the inverted hammer and the shooting star, which are basically like mirror images of the hammer and the hanging man.
So instead of a long lower shadow, they have a long upper shadow.
Precisely.
Okay.
So the inverted hammer forms at the bottom of a downtrend.
And that long upper shadow, that's telling us what?
That buyers tried to push the price up,
Okay.
but there was too much selling pressure and they couldn't quite make it.
Okay.
Now the shooting star appears at the top of an uptrend.
Uh-huh.
And that suggests that maybe buyers are starting to lose a little bit of momentum.
So a long upper shadow at the bottom of a downtrend that's an inverted hammer could signal a bullish reversal.
Could, yes.
And then a long upper shadow at the top of an uptrend, that's the shooting star,
Right,
could indicate a bearish reversal.
precisely.
Mm-hmm.
But again, we always wait for confirmation before making any trading decisions.
Confirmation is key.
Key.
I got it. Okay, so we've covered these, one-day reversal patterns.
Mm-hmm.
Now let's move on to some more complex patterns.
Yes, let's do it.
The ones that, unfold over 2 or 3 trading days.
Right.
The book has some fascinating examples,
Mm-hmm.
including the engulfing patterns,
Oh, yeah.
which I hear are visually pretty striking.
They are.
So tell me about it. What do these engulfing patterns look like, and what do they tell us about, what's going on in the market?
Okay, picture this.
Right.
One candlestick completely swallows the previous one.
Whoa. Okay.
That's what we call engulfing.
Gotcha.
We have the bullish engulfing pattern,
Okay.
where a large white candle engulfs a smaller black candle.
Uh-huh.
And we have the bearish engulfing,
Okay.
where a large black candle engulfs a smaller white candle.
So it's like one candle just, eats up the previous day's price action.
That's a great way to put it.
Right.
Yeah. And that visual drama represents a sudden shift in the balance of power between buyers and sellers.
So for, a bullish engulfing pattern,
Mm-hmm.
it's like the bulls are suddenly in charge.
They took charge.
And they just overwhelmed the bears.
Yes.
Let's imagine a stock's been in a downtrend.
Okay.
So the first day, we get a black candle showing that the sellers are in control.
Right.
But then the next day, the buyers step in.
Yes.
With force.
With force.
Driving that price
up,
closing well above the previous day's open.
Yes.
This forms a big white candle.
A big one.
That completely engulfs the previous black candle.
It does.
And that signals a potential bullish reversal.
A potential bullish reversal.
Wow, so it's not just about the price going up.
Right.
But the way that it just consumes that previous day's trading range.
That's what's important. It shows a real shift in sentiment.
That's powerful. What about the bearish engulfing? Is it just the same concept in reverse?
Same concept in reverse.
Yeah.
So we've got our uptrend.
Mm-hmm.
A white candle forms. The next day, the sellers come in, they hammer the price down, and they form a large black candle that engulfs the previous white candle.
So the bears came in and just wiped out the bull's progress.
They did. These patterns are so visual. It's amazing how they can capture these shifts in market dynamics.
Yeah, really cool. The book also talks about a few other two-day reversal patterns.
Yes.
That are kind of similar to the engulfing patterns, but with maybe like less dramatic engulfment.
Right. They still involve a color change.
Okay.
And a shift in momentum, but not a complete engulfment.
Gotcha.
So we've got the dark cloud cover.
Okay.
Which is a bearish pattern where a black candle opens above the previous day's high, but it closes deeply within the white candle's body.
Interesting.
Like a dark cloud.
Casting a shadow.
Yes, exactly. Casting a shadow over the previous bullishness.
Okay.
And then we have the piercing line, which is the bullish counterpart,
Okay.
where a white candle opens below the previous day's low, but closes significantly into the black candle's body.
So it's like piercing through the bearish sentiment.
Exactly.
So those patterns are kind of like, less aggressive versions of the engulfing patterns.
Yeah.
But still signaling a potential reversal.
Still a potential reversal.
Okay, cool.
Yeah.
Are there any other two-day patterns we should know about?
Yes, there is one more. The Harami pattern.
Harami.
And this one is visually very unique.
Okay, tell me more. I'm intrigued.
This one gets its name because it looks like, get this, a pregnant woman.
Okay, that sounds, I don't know, a little strange.
I know.
But tell me more.
I know it sounds strange, but hear me out. It's made up of a large candle, either black or white, followed by a much smaller candle of the opposite color that's completely engulfed within the body of the first candle.
So it's like a big candle with a little baby candle nestled inside.
Exactly.
I love it.
And the psychological interpretation here is really interesting.
Tell me.
So this pattern suggests a pause in the prevailing trend.
A moment of indecision.
Yeah. So if we see a bullish Harami after a downtrend, it's like the bears are taking a little break.
Okay, we need to catch our breath for a second.
Exactly.
Yeah.
That large black candle shows that the bears were in control, but then this small white candle pops up within its body.
Suggesting that maybe the selling pressure is easing up a bit.
Right, easing up. And for a bearish Harami after an uptrend, it means the bulls are maybe starting to lose a little steam.
Okay, we've been pushing this for a while. Maybe we need to take a break too.
Exactly. It hints at a potential shift in momentum.
So are you ready to explore some even more powerful patterns?
I am. Let's do it.
Okay, these are the 3-day reversal patterns, and I'm ready to learn about the morning star and the evening star.
Oh, yes. These are great.
I mean, those names alone sound pretty powerful.
They do.
Right.
They're powerful names.
What are they all about?
These are some of the most reliable and powerful reversal signals in candlestick charting.
Okay.
Each of them unfolds over 3 days. And they show a very distinct shift in sentiment.
Gotcha.
So the morning star is a bullish reversal pattern.
Okay.
And the evening star signals a potential bearish reversal.
Gotcha.
2 sides of the same coin.
So let's start with the morning star. What does it look like and what's it telling us?
Okay, so imagine a downtrend. The first day, a large black candle forms, showing those bears are in control.
Okay, bears are in control.
The second day, we get a small-bodied candle.
Okay.
Could be either color, could be a doji or a spinning top.
Right.
But this is a really crucial day.
Why is that?
It shows indecision.
Oh.
It's a potential turning point. Then on the third day, a large white candle emerges.
Oh, okay.
Closing well into the body of the first day's black candle.
So it's like the darkness of that downtrend is pierced by this bright, shining morning star.
Exactly.
I love that imagery.
It reflects what's happening psychologically in the market. The bulls are stepping in, they're reclaiming that lost ground.
Okay.
And they're signaling a potential reversal.
So what about the evening star? Is it just the opposite?
It's the opposite. It forms at the top of an uptrend. So the first day, we have our big white candle. Bulls are partying.
They're loving it, right?
They're loving it. Second day, a small-bodied candle appears, showing a pause in that upward momentum.
Okay, like they're getting tired?
Yeah, maybe. And then on a third day, a large black candle forms.
Closing where?
Closing well into the body of the first day's white candle. It's like a dark star dimming the bull's light.
Okay, I see. So both patterns have this little small-bodied candle in the middle, sandwiched between the two large candles.
Right.
Of opposite colors.
Yeah.
That middle candle, that seems like the turning point.
It is. It's a pause, that moment of indecision.
So cool. The book even mentions how these patterns got their names from the planets Mercury and Venus.
Oh, really?
Which appear as those bright stars in the morning and evening skies.
That's cool. I didn't know that.
Right.
Yeah.
Linking these patterns to something bigger than ourselves.
I like it.
But like with any candlestick pattern, confirmation is key. Right.
Always, always.
We want to see what happens after that third day to confirm if the reversal is actually happening.
Yeah.
So for a morning star, we'd look for continued buying, pushing that price higher.
Exactly.
And for the evening star, we'd anticipate like further declines.
Right, further declines.
Okay, so far we've just been looking at these candlestick patterns, kind of like in isolation. But in real-world trading, they're often used with other technical analysis tools.
Of course.
So, like, how do candlesticks fit into that bigger picture?
That's a great question.
Right.
Yeah.
And that leads us perfectly to the next part of our deep dive.
Let's do it.
We're going to explore how these patterns can be combined with other indicators to give us even stronger trading signals.
Love it.
Okay. So we've got this, like, visual language of candlesticks.
Yeah.
They're showing us these shifts in market sentiment. But how do we actually use them? How do we combine those patterns with other tools to make smarter trading decisions?
Well, the book suggests combining these candlestick patterns with some other technical analysis techniques.
Like what?
Like support and resistance levels, for example.
Right, right. These are those price zones where a stock just can't seem to break through, either up or down.
Exactly, historically.
I've always found those a bit tricky to, like, actually identify. How do we actually pinpoint those on a chart?
It's all about observation, really. Observing that past price action, support levels are like floors. Prices tend to bounce off them when they're falling.
Okay.
Resistance levels are like ceilings. Prices often struggle to move above them.
So we're looking for those points where the price, like, hits a wall and then reverses.
Exactly. Look for those clusters of highs and lows, areas where the price is reversed multiple times.
Got it.
The more times a price level has held, the stronger that support or resistance is.
Okay, so I'm starting to see it. So how do we actually use these levels, together with candlestick patterns?
Well, it's all about context. Candlestick patterns become much more significant when they form near those key support or resistance levels.
Can you give me an example?
Sure. So let's say we see a hammer pattern forming right at a support level.
Okay. Hammer at support.
What would that tell us?
Well, we know that the hammer itself hints at a potential bullish reversal.
Right.
But now we have this added context, right?
Yes.
Of that support level.
Exactly, and that strengthens the signal.
So it's like that support level is giving the bulls a solid foundation.
The base.
To make their comeback.
Exactly.
I bet a hanging man forming near a resistance level would be like the opposite.
Exactly, strengthening the bearish signal.
Because the resistance level already suggests that sellers are likely to appear.
Right.
And that hanging man, boom, confirms it.
Confirms it.
So it's like this extra layer of confirmation.
It is.
The candlestick and the support or resistance level, they're telling the same story.
They are. Now, besides those support and resistance levels, are there any other tools that we could use to enhance our candlestick analysis?
Ooh, good question. What else is out there?
Well, the book also recommends using moving averages.
Ah, moving averages. I've seen those lines on charts, but I've always been kind of intimidated by them.
Yeah.
What are those, and how can they be used with candlestick patterns?
Okay, so a moving average, it basically calculates the average price over a certain number of periods. So, for example, a 50-day moving average, it calculates the average closing price over the last 50 days.
So it's like we're taking the snapshot of, like, the average price trend over time.
Exactly.
Ignoring all the daily ups and downs.
Right, smoothing it out. And here's what's really interesting about moving averages. They can actually act as dynamic support and resistance levels.
Dynamic. What does that mean?
Well, unlike those horizontal support and resistance levels that we see on the chart, moving averages are constantly changing.
Oh, okay.
As new price data comes in.
So they're like moving targets. They are.
Reflecting that, always evolving trend of the market.
Exactly. So, for example, let's say a stock is in an uptrend and the price dips down towards its 50-day moving average. That moving average could actually act as support, preventing it from falling even further.
Got it.
And if the price breaks below that moving average, that could signal a shift in momentum, potentially the beginning of a downtrend.
Ah, I see. So by putting those candlestick patterns together with those moving averages, we get a much more complete picture of those potential reversals.
We do. For example, imagine a bullish engulfing pattern forming right at that 50-day moving average. That would be a very strong signal.
Right, because it's showing that not only are the buyers taking control, but they're doing it at this key support level.
Exactly. We're getting that confirmation from multiple sources.
Gotcha.
Which means a higher probability of a successful trade.
Now, even with all these, powerful techniques that we're talking about, it's important to remember that, trading always involves risk.
Right. There's no such thing as a foolproof strategy. Even those, perfect candlestick patterns aren't guarantees of profit.
Exactly. Which brings us to a crucial aspect of trading: risk management.
Okay.
How do we protect ourselves from those inevitable losses?
Right.
The book talks about stop-loss orders.
Stop-loss orders, right. These are instructions to, automatically sell your position if the price drops to a certain level.
Exactly, like a safety net.
A safety net.
Yeah.
I've always struggled with knowing where to actually set those levels.
Well, that's where our candlestick knowledge can really help us out. Those patterns can give us clues.
So how do we use the candlestick patterns to figure out stop-loss placement?
Remember, each pattern tells a story about the struggle between those buyers and sellers. So our stop loss should be placed at a point where that story changes.
Okay, so give me some examples.
Okay, let's think about the hammer pattern. Remember that long lower shadow?
Yeah.
That's where those buyers stepped in and reversed the downward momentum.
Right.
So a logical place for our stop loss would be just below the low of that hammer.
So if the price falls below that level, it's like the buyers are giving up.
Yeah.
And that downtrend is probably going to continue.
Exactly. Now, for a bullish engulfing pattern, we'd usually place the stop loss below the low of that engulfing white candle. If it breaks below that, it suggests the bulls weren't strong enough.
To maintain that reversal.
Exactly. So we're looking for those points where the pattern's message is basically invalidated.
What about sell signals? Would we use that same logic but in reverse?
Precisely. For a hanging man, we'd place our stop loss above the high of the candle. If the price breaks above that level, it means the bears weren't able to hold on.
And that uptrend might continue.
It might.
Okay.
It's all about those dynamics of the pattern.
Right.
Placing the stop loss at a point that basically cancels out the signal.
So stop loss orders, that's just one part of, a good risk management strategy, right? The book also talks about, calculating the risk-reward ratio before we even enter a trade.
Very important.
So, for example, if my target price is $10 above my entry price and my stop loss is $5 below my entry price, then my risk-reward ratio is 2.1, meaning I'm potentially making twice as much as I'm risking.
Exactly. And the book suggests aiming for at least a 2.1 ratio, if not higher.
That makes sense. It means that even if we lose on some trades, the winners should more than make up for it.
Exactly, because trading is a game of probabilities.
Right.
No strategy is 100% accurate.
Of course.
But by managing our risk, we can make those probabilities work in our favor.
This has been incredibly insightful. It really emphasizes that it's not just about, spotting those patterns, but it's also about understanding that context and managing risk. You mentioned earlier that candlestick charting can also be used for long-term investing. I'm really curious to learn more about that.
Yeah, let's talk about that. Let's see how these same principles and patterns can be used to analyze weekly and monthly charts.
Okay.
To look at those longer-term trends.
So we've been mainly talking about using these candlestick patterns for more, short-term trading.
Right.
But can we also use these techniques for those of us who are more into long-term investing?
Absolutely, we can.
Really?
Yeah.
Tell me more.
The same principles, the same patterns that we've been talking about, they work on weekly and monthly charts as well.
So instead of looking at, those daily price changes, we're kind of zooming out.
Zooming out, exactly, to see the bigger picture, the long-term trends.
It's like switching from a microscope to a telescope.
I like that analogy.
Right.
Yeah.
We're still searching for those same patterns, those signals that sentiment is shifting. But now we're seeing them play out on a much larger scale.
Exactly.
It's interesting because even for someone who's like a long-term investor, really focused on a company's fundamentals, monitoring those long-term charts using candlestick patterns can still offer some valuable insight.
Oh, definitely.
Like, for example, let's say you're holding a stock that you think has great long-term growth potential.
Okay.
You've done your research, you believe in the company, their management.
Right.
But even the best companies, they can face some setbacks.
Of course it happens.
And sometimes those setbacks can actually be seen in the price action, like even before they show up in those fundamental numbers.
Right. It can be an early warning sign.
So by looking at the weekly or monthly candlestick charts, you might be able to spot those warning signs early on.
That's the idea.
Maybe you see a bearish engulfing pattern forming on a weekly chart.
Okay.
Could that suggest that the long-term uptrend is starting to weaken?
It could, even if the company's last earnings report looked fantastic.
Right.
It might be telling you that something is changing.
Something under the surface.
Yeah, something might be brewing.
Or imagine you see a Morningstar pattern on that monthly chart.
Okay.
Could that mean that a long-term downtrend is about to reverse?
It's possible it could even signal the start of a whole new bull market for that stock.
So even if you're not actively trading every day,
Right.
these patterns can still give you useful information for managing those long-term investments.
Absolutely.
They can help you stay ahead of the game, anticipate those potential shifts, and then adjust your strategy as needed.
Exactly.
It really does seem like candlestick charting can be an incredibly valuable tool for any investor, no matter what their time frame is.
I think so.
Whether you're a day trader, a swing trader, a long-term investor, understanding these patterns can definitely give you an advantage.
It all boils down to recognizing those recurring patterns of human behavior, the things that actually move markets.
Fear, greed, hope.
Exactly. Doubt.
All of those emotions.
All of them.
They're always swirling around in the market.
They are a constant presence.
And candlestick charts, they're like a visual representation of all of those emotions playing out in real time.
That's a great way to put it.
The more you understand those patterns, the better you can anticipate those emotional shifts.
Exactly.
And I think that's what really sets apart, the successful traders and investors from the rest.
It is.
It's not about, predicting the future perfectly.
Nobody can do that.
Right.
It's impossible.
It's about understanding those probabilities.
Right.
Recognizing the signs.
Yes.
And acting decisively when those odds are in your favor.
Exactly.
This deep dive has really given me a whole new perspective on the market. I'm starting to see those charts not just as a bunch of lines and bars, but as a reflection of what's actually happening in the minds of traders.
That's what's so fascinating about candlestick charting.
Yeah.
It's a visual way to understand those forces that really drive the market.
So as you continue to explore this world of candlestick charting, keep this in mind.
Okay.
What if, instead of reacting to those price movements, you could actually anticipate them?
That would be incredible.
Right.
Yeah.
By understanding the emotions that are behind them.
The psychology of it all.
That's a pretty powerful thought, right?
It is.
And I think candlestick charting gives us the tools to actually do that.
I agree.
Well, thanks for joining us on this deep dive into the fascinating world of candlestick charting.
It's been my pleasure.
We hope you've learned something new and valuable that will help you approach the markets with more confidence and success.
Absolutely.